Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph and I store 20% of my income in the form of rare coins and precious metals. Right now there's a rumor circulating that the IRS is about to reduce their $10,000 cash reporting limit to $3,000. Let's talk about it. Congratulations to Emmanuel for being the first comment in yesterday's video. Find him down below and start a conversation. If you stack silver and gold, or you've inherited a collection, or you're simply trying to understand what happens when precious metals change hands, this video is meant to slow down the conversation and replace speculation with structure. I'm not a financial advisor or a tax professional, but everything in this video comes directly from long-standing federal law, IRS guidance, and how these rules are enforced in practice. This is not a warning video, it's an explanation video. The $10,000 cash reporting requirement originates from the Bank Secrecy Act of 1970, legislation designed to combat money laundering and financial crimes by creating transparency around large movements of physical currency. Under this framework, businesses, not private individuals, are required to file IRS forms 8300 when they receive more than $10,000 cash in a single transaction or in a series of related transactions. That distinction matters. The obligation to report does not fall on the buyer or seller acting as a private individual. It falls on a business receiving the cash. This rule applies whether the transaction involves precious metals, a vehicle, real estate, or any goods or services. This law is not a metal-specific law, and it has not been revised to introduce a lower threshold. This reporting requirement does not only apply to a single isolated transaction, it also applies to what it calls related transactions. These are transactions that are connected by time, purpose, or parties involved. The reason for this provision is straightforward. Without it, large cash transactions could be easily broken into smaller pieces to avoid reporting. This concept is not new, but it's frequently misunderstood. Related transactions are evaluated based on context and pattern, not an arbitrary dollar amount. The presence of related transactions does not automatically imply wrongdoing, it simply ensures that the reporting rule cannot be bypassed through technicalities. In addition, there are anti-structuring rules that exist to prevent intentional avoidance of reporting requirements. Structuring occurs when someone deliberately breaks up a transaction to stay below that reporting threshold with the goal of evading disclosure. The key word here is deliberate. Intent is central in how structuring is defined and enforced. This is where much of the current fear originates from. People hear that a transaction under $10,000 can be problematic, and they assume that that threshold has been effectively changed in some way. That assumption is incorrect. Structuring is not about the size of the transaction in isolation, it's about the behavior designed to avoid this compliance. Normal financial behavior such as dollar cost averaging into silver, making routine purchases over time, or selling portions of a collection based on market conditions does not constitute structuring. Structuring involves clear attempts to evade reporting, often through coordinating timing or explicit conversations about avoiding this paperwork. Although none of these laws are new, enforcement feels more visible today. Compliance systems are more automated, businesses are more cautious, and regulatory awareness is higher than it was a decade ago. This increased visibility creates the impression that the rules themselves have changed, when in reality it's just the consistency of enforcement that's improved. Another factor is the blending of unrelated reporting requirements make this very confusing. Cash reporting rules, security reporting rules, and even payment processing reporting rules have all been mixed into this misunderstanding of what people are allowed to do. Online discussions frequently collapse them into one imagined update, creating confusion where none legally exists. Precious metals attract a lot of attention in this regard because they combine physical value, portability, and a long-standing connection with privacy. This makes them fertile ground for this type of rumor, especially during periods of economic uncertainty. When prices rise quickly or when regulations are discussed broadly, misinformation can fill the gaps. This $3,000 rumor thrives because it sounds plausible to people who are ready to hear about the government stepping in and those who are only partially familiar with these reporting rules. In reality, the reporting framework governing cash transaction has not changed. The $10,000 transaction remains in place. Anti-structuring rules remain focused on intent and not ordinary purchasing behaviors. Businesses are required to report, and they face serious consequences if they don't. These consequences include up to a $5 million fine per incident and even imprisonment. If someone thinks they're getting around reporting because their dealer didn't mention it, one of two things is happening. Either that business is putting themselves at a serious legal risk, or the transaction is being reported without any announcement at all. What has changed is awareness. People are paying closer attention, asking better questions, and encountering more misinformation along the way. The IRS is not lowering the cash reporting limit to $3,000. What we're witnessing instead is a convergence of increasing enforcement, modern compliance systems, and online speculation. When those forces collide without context, rumors can easily fill the space. And this video exists to replace that rumor with the context needed to fully understand the actual $10,000 cash limit. You can now write me at Joseph's Reserves, 10160 Highway 242, Suite 800, number 401 in Conroe, Texas, zip code 77385. Make sure to include your information so I can write you back. If you like this video or learned from it, please go down and give me a thumbs up. Direct any questions or comments down to the comment section. Please subscribe or share the video, but most of all, thank you so much for watching, and just remember, every ounce adds up, so no matter how small, just keep stacking.